prepared to capture the significant opportunity that electric vehicles offer. Tata Motors has signed a pact with TPG Rise for equity funding of $1 billion. That's almost 7,500 crore rupees for a stake of 11 to 15% in a separate entity, an EV company that will be created to focus only on electric vehicles. This transaction assigns a post-money valuation of $9.1 billion. That's almost 68,250 crores to Tata Motors EV business, which is 45% of the current market capitalization of the listed entity, that is Tata Motors. The EV industry has been registering a growth of 1.5 to 2x every year between FY17 and FY21, and it's expected to post a 2.5 to 2.7 times growth of FY21 volumes in FY22. And now the industry is gearing up for an exponential growth. There are myriad reasons which can potentially lead to huge growth in the EV space. Favorable government policies, wherein the government has started giving monetary incentives. Rise in the total cost of ownership of traditional ICE vehicles due to change in emission norms, and increase in fuel cost and aspirational launches by OEMs are some of the factors that will fuel EV demand. Currently, Tata Motors is an undisputed leader in manufacturing and selling EVs in India and has 3 products in its portfolio. Now, on the back of product performance, Tata Motors has been able to capture more than 70% of domestic EV market share. If you look back, the company sold 4,200 odd EVs in FY21, and in FY22, it has already sold 3,341 units till now. Tata Motors EVs have reached 60 cities and have 150 touch points that's driving the growth for the company. To create a wider adoption, Tata Motors provides captive chargers to customers, and it's also offering various ways to customers to test as well as own EVs. In terms of future plans, Tata Motors aims to launch 10 new electric vehicles, catalyze charging infrastructure, and invest proactively in drivetrains, products, as well as platforms. Now, talking about the deal, under the transaction, the company has proposed to create 2 subsidiaries. One for traditional passenger vehicles, where the listed entity Tata Motors will hold a 100% stake. And the other one for electric vehicles, where TAMO will hold 85 to 89% stake, and the remaining 11 to 15%, like I said, will be held by TPG Rise. Now, TPG Rise Climate is a $7 billion fund with a focus on investing in companies that enable carbon reduction in a quantifiable way. TPG Rise has made a commitment to invest $1 billion, of which 50% will be paid by March 22, post setting up of the EV company, and the remaining will come by Q3 FY22. The deal values Tata Motors EV company business at $9.1 billion, close to 68,250 crores, which is 45% of the current market cap of Tata Motors. The EV company will use all the existing investments in technologies, brands, manufacturing capacities, and even the sales network of the PV company, which will keep the EV company asset light. It, however, will pay a fee to the PV business for using its facilities. Additionally, the EV company will create and build its own future intellectual property. To succeed in EVs, Tata Motors needs to make an investment to the tune of 16,000 crores over the next 5 years in products, platforms, drivetrains, dedicated EV manufacturing, charging infrastructure, and advanced technologies. Therefore, this deal plays an important role in accelerating the progress in this area. So, from an investor standpoint, what should you do? Now, despite a 25% rise in the stock price in the last 5 trading days, our SOTP valuation suggests another 28% upside. Hence, we advise investors to accumulate Tata Motors for the long haul.